Hello friends, today we have amongst us Mr. Varun Goel, who is the head of equity with alternative investment funds in Reliance. So Varun, we would like to understand from you the space of alternative investment funds is evolving. There are a lot of aspirants, a lot of professionals in the advisory space, and especially ultimate end investors who are wanting to understand the space. So, SEBI has demarcated as category 1, category 2, category 3, which is a very technical, jargon. So, in simple words, if one has to understand what are these three categories, would you please like to elaborate that?
Sure. Okay, so we believe alternate investment funds is a very powerful vehicle that the industry has come up with in the last, I think, 5 years now. We have, to my recollection, 70 to 80,000 crores are already assets under management for this industry. It is growing at a very, very rapid pace, and we see a very, very bright future ahead. In terms of course, what kind of funds one can invest in, there is different categories as you rightly mentioned, but very broadly, the way it has been structured is that there are different categories of funds depending on underlying asset class and also what is the mandate for each of those funds. So, for instance, we have some of the real estate funds, basically where there are a lot of products like debentures, fixed income instruments which are there. Normally, a lot of these funds get structured as part of category 1. Category 2, we have a lot of private equity / venture capital funds where you have again unlisted instruments which are there, and these are typically very long gestation instruments.
Sure.
Typically, let's say 6, 7, 10, 12 years also.
Sure.
And third, we have the category 3 funds, which is what we do in terms of equity funds. Now, equity funds, it could be long only, it could be long short. You could do a variety of things under the AIF category 3 construct, depending on what is the mandate of the product. So there is a lot more flexibility. There is a lot more differentiation that can be offered to the customers in terms of various asset classes, various investment strategies. Also, we believe that AIF as a product is much simpler from a documentation perspective.
Sure.
Is also very, very convenient. If you see from a perspective of taxation, because all income that is there in the fund is taxed at the fund level itself. So in the hands of the investor, the income is completely tax free. So the investor does not have to fill advance tax every quarter and some of the other things.
Sure.
That they have to do in some of the other vehicles.
Right.
So from that point of view, we believe it is extremely convenient. And the third, I think, very strong advantage of AIFs is that you can give money in a drawdown construct. So let's say a person wants to commit 100 rupees, but let's say he's reluctant to put it right away. What a lot of asset management companies offer is that he can give it over 2 or 3 tranches over a period of 6 to 9 months. So for those investors who are worried about market sentiment and some of the geopolitical developments and stuff like that, the vehicle gives them that flexibility to spread their investments out over a period of time.
So, while AIF is allowed to do a lot of complex strategizing, that is understandable. However, the more keen interest in regards to Indian context is more with regards to, first of all, equity markets. Mm-hmm. And secondly, it is always regards to buy and hold or, listed space, right? So, which is technically the category 3 in regards to alternate investment funds, right? So now, in this regards, right, there are other two vehicles like mutual funds and portfolio management services. So if simply one is looking to just buy listed equities, right, why and how one should invest into alternate investment funds versus, say, mutual funds or PMS?
Right. Okay, so that's a great question. So let me just try and answer that. So we ourselves run 4 products on the long only category 3 AIF, and we believe that for long only equity, AIF is again a great construct and vehicle for the reasons which I would just mention. One, we believe it gives you the comfort of launching products which are more thematic in nature. So for instance, we have a product, let's say, which is called the millennial strategy, in which what we are doing is we are buying only those companies which are catering to the millennial population, or whatever products and or services that these demographic segment consume. We have created a dedicated product around that. So it gives us the comfort to do a very thematic kind of idea, unlike a very large or diversified products which are there on the mutual fund and the PMS platform. That's point number one. Second, in terms of operational ease, as I said, we have PMS as asset class, which typically involves a lot of documentation. In AIF, documentation is much simpler and easier to do. Third, I think also from a taxation point of view, investors don't have to pay any tax as far as AIFs are concerned. They are free to all the taxes, whether long term or short term, are paid by the fund itself. So all the income in the hands of the investor is completely free. Fourth, it is a pooled vehicle of investment. So therefore, one has the comfort and luxury of buying whatever stocks we believe are available at the right valuation now. So let's say I'm constructing a portfolio of 20 stocks, but I believe out of those 20, there are only 14, 15 which are available at reasonable valuation and 5 are a little expensive. So what I can do, unlike in a PMS where I will replicate the model portfolio, in an AIF, I can buy only the 15 stocks today, and the remaining 5 I can buy over a period of time when, let's say, these stocks connect. So it has, in a way, AIF has the best qualities of a mutual fund, which is a pooled vehicle,
Sure.
and the best qualities of a PMS, which is a more concentrated, customized kind of a vehicle. So you put both these things together, and I
Right.
think AIF kind of assimilates that quite
Sure.
well.
So you basically trying to say that an AIF brings together the operational ease of mutual funds
Mhm.
and the flexibility in terms of asset management of a PMS together.
Absolutely, absolutely.
Right. So which is very right thing. However, the minimum ticket size in case of AIF is a 1 crore.
Mhm.
Right. So from this context, what is the kind of drawdown mechanism that SEBI mandates? So if someone wants to commit 1 crore, what is the kind of time horizon in which as per SEBI, one has to fulfill the commitment?
Right. Okay. So I think drawdown is a great mechanism. What we have seen in our products, we launched our first product in 2017 August, right? And what we did was that we had an initial fundraising period of 3 to 4 months, post which we did the second drawdown of let's say it was 30, 35%, 35%. That constitutes the 3 drawdown. The first drawdown was 30%, and by the time this drawdown was over, it was already December. By then, as you know, the markets had already peaked, and then the correction started. So 3 months down the line, let's say in sometime in March and April, we called for a second drawdown, and what it led to is that investors were able to buy some of those mid-cap stocks much cheaper valuation as compared to what they were in December of 2017. And then further 3 to 4 months down the line, so let's say somewhere around June, July, we asked for the last drawdown. So overall, if you see, the investors invested their 1 crore over a period of 1 year, and at that point of time, mid-cap index moved in a range of around 25%, which is a very, very large range. And we clearly seeing the benefits of spreading out the investments of investors over a long period of time, because then they can average out, and let's say events like what have happened in the last 18 months happen, and therefore a lot of investors have also concerns, and they are they believe it is better to spread it out over a period of time. So there is no fixed timeline, from SEBI point of view. There is something called a PPM, which we're supposed to file before any product is launched, and all these things need to be defined and informed to the investor in advance. And we believe AIF gives the right flexibility in terms of spreading out the investments, let's say over a period of a year.
Right. So I understand there are a lot of merits of investing into an AIF. However, AIF products are categorized as an investment products which are done on private placement.
Yes.
Right. For which publicly an advertisement cannot be done.
Right.
Right. And hence, then there are difficulties for an ultimate investor to understand and compare an AIF product. So what are your views regarding this aspect? How are you disseminating information in terms of risk disclosures, in terms of the return matrices about your products with your ultimate investors?
Right. I think that's again very, very important, because as you rightly mentioned, it's a private placement product, and therefore any investor who's coming in has to ensure that he does the right due diligence. There are several AIF service providers. What I'm very happy to share that RELIANCE AIF has been doing AIF products since 2012. And this is, we have already done 4 equity AIFs, we have done 4 real estate AIFs, and we are doing a tech AIF. So we have done 9 to 10 products already over a period of 6 to 7 years. So we have large experience, We have gone through our own learning curve in terms of how to deal with operational issues, taxation issues, how to do client servicing, how to do the performance reporting right. So there are a lot of things, I think, which need to be in place to ensure that the customer has a good experience over a longish period of time. Of course, you have to ensure that the customer also has a good experience from a return point of view, but all the other things are also very, very important. So I think it is important for any investor who's coming in to ensure that he does his due diligence in terms of all of these parameters,
Right.
before he comes in. And second, I think it is important that more and more information goes out, as you rightly mentioned, that this is a private placement product. Therefore, it is important that the investors understand it in detail. Sometimes they like to meet the fund manager. Sometimes they want to understand what is the philosophy. So it's always a good idea to understand the theme of the product. And I think now we have platform like yours, which are doing a lot of good work in ensuring that accurate information about service providers, about fund managers, fund houses goes out, and I'm sure that will lead to more awareness about these products.
Right. Thank you so much for your kind words. Finally, I would like to understand from you very quickly that there is a theoretical understanding that mutual funds, buying stocks, are considered to be core asset classes.
Mm-hmm.
But investing into long short funds, venture equity funds, private equity funds, or these are considered to be alternative investment classes. So an AIF, right?
Yes.
So why do we call it as an alternative first of all, and then what is the recommended allocation in alternatives versus the core asset class?
Okay. So I think let me take the second part of the question first. I think every investor is unique in the sense that he has his own objectives, financial goals and objectives, his own aspirations, whatever goals he sets for himself 10, 20, 30 years down the line. So I think it is for the wealth managers and advisors to sit with the investor and clearly chalk out a plan in terms of what instruments, what asset classes, what products are going to ensure that his financial objectives and goals are being achieved. So that's, I think, very, very important. Now, once a plan is put in place that this is the whole range of products that we would like to have in your portfolio over a period of time, then different products, different vehicles fulfill their own objectives. So we do have mutual funds, which, as you rightly mentioned, could be a very core part or large part of investor holdings. They could be in different asset classes, could be in equity, could be in debt, could be in precious metals and stuff like that. And then, within each of these asset class, you can do it through a conventional vehicle like a mutual fund, or you can do it through alternatives like AIF and PMS. I think one very, very important thing to understand is what is the level of engagement that the customer wants to have in terms of how his wealth is being managed. Typically, to my understanding, those investors which are a little more involved, which are a little more engaged in how their money is being managed,
Sure.
they would like to come, let's say, to a AIF or a PMS, because they can see for themselves, how their money is being managed. Typically, if I were to look at it, if you are a mutual fund investor typically sees the NAV and how his product's performance is over a period of time. But a PMS or a AIF investor is also keen to know what stocks are being bought, what is the fund manager doing, and he typically likes to interact with the fund manager at various points of time. Maybe he has some other investments for which he likes to gain some more knowledge. So I think for those investors which are a little more engaged in terms of how their wealth is being managed, which like to be on top of what is happening, do like to come in these kind of products. Third, I think is that diversification is always good. So while you do have conventional products like MFs and all which are there, a lot of times incremental alpha can be generated by being part of products like AIFs, and we believe that's where globally we have seen, be it US, be it Europe, AIFs have had a very large role to play. The alternative industry, as you know, in US is extremely large. 40% of the total assets of the asset management industry in US are in the AIF space. While we are just a few percentage points as of now, and we believe AIFs can fulfill different requirements in terms of risk returns, in terms of different investment philosophies, in terms of different investor classes and asset classes. So we see a very, very healthy future for AIF industry.
Right. Thank you so much.
Thank you.
Pleasure talking to you.
Same here. Thank you.